Buddy Andrew Makovic for our weekly Hump Day Holla podcast. Appreciate all the amazing feedback we're getting. People are loving the topics. Look, Andrew, the one thing we give, man, is just real. What do we call it?
Unencumbered truth.
Unencumbered truth. Facts, our facts, but we use data. We're highly data driven. That's why me and you get along. So it's a no fluff. So appreciate all the awesome feedback. And again, look, we're easy to find. Follow us, find our social media pages, me, Mortgage Gumbo, Andrew Makovic. He's also attached here. So go check it out. Google him, go follow him. Great stuff. He's putting out daily content, which is absolutely amazing. Good feedback.
You are great hype man. Thanks, Dwayne.
Hey man, that's what we do, buddy. That's what we do. So so it's good stuff. People want, for us, look, we could sit here for hours a day and do this. And maybe one day, if our following continues to grow like it is, that's what we'll do, right?
Hey, the Kelsey brothers can do it.
Right.
Maybe
why can't we, right? I mean, I know you're married, but I'm not. But if there's any super celebrities out there, like a Taylor Swift or something, hey, reach out to the D Train, and hey, we can gain our popularity that way, right? So let's talk about Andrew. We did a real big. I got tons of feedback last week. We were talking about down payment and how that works, and it was so popular, and I got so much feedback. I did my Mortgage Gumbo show on it this week as well. But I think even before we get to down payment, right? I think it's so important that we talk about with our listeners is what's the right loan program for you, right? Like, how do you know what to believe? Because you'll see, I had somebody call me about an assumable mortgage, and so let's kind of talk about, because I think that is the thing that maybe keeps a lot of people off to the sideline because they're told or they read this, that, or the other, and maybe they're hearing they need 10% down on a program that they really don't need anything. So kind of what is, not to give away all your industry secrets, so to speak, but what are some of the things that you do when you're talking to a client to start trying to dial them in to find out what's the best path or route for them to take to home ownership or even a refinance?
I think it comes down to what's the best fit for the buyer, right? So, it's having those conversations with them, getting that information. After getting it all, of course, part of it is like, hey, what's the payment you want to stay within? What's the price range you want to stay within, right?
Right.
There's really 4 buckets if we're going into our cross-country mortgage loans, right? So our QM loans, right? So it's it's going to be conventional or government. If it's government, are they a veteran? Great, we can go VA. If they live in a rural area, USDA, or if not, FHA, right?
Yeah.
But not all times that, even though somebody could qualify for a conventional loan, maybe the FHA is a better monthly payment for them, right? Maybe so we have to look out for, I guess, what's the best for the client. But then after explaining to them, hey, these are the options you qualify for, even though you can qualify for all these, in the area you want to live in, you probably need to do this particular loan to get the best probability of getting an offer accepted, right? So that's a whole nother level of explaining. But, you lay the cards out there, and ultimately they're going to decide, right? Like, I'm going to educate, but I can't make somebody do something they don't want to. We can't make anybody do anything they don't want to.
Right.
But explain that to them, right?
Yeah, and I think at the end of the day, our job when we are hired by our clients, it's and that's the biggest piece I want to make sure that folks understand. You're hiring us. We work for you.
Right.
And we don't take that lightly. So it's our job, like you just said, Andrew, to provide options, right? We're going to, and then educate you on why we're presenting those options.
Right.
Right. However, if I tell you qualify for 5%, but you're adamant about putting down 20%, okay. Right? That's right. You are the boss. Yeah. We work for you. And I think that's a big thing that so many folks don't understand. The loan officer, the realtor works for you. You're the boss. It's not the other way around. And so many people that I get that call in from the radio show when they're doing a free second look are like, well, I was told I had to do this. And that's the frustrating part, Andrew, when you and I, we take pride in doing things the right way, but it's giving them the whys, because we know, you and I know, we can't put anybody in a house that they don't qualify for,
right? Yeah,
right,
exactly.
or that they can afford. Right. However, we understand those numbers may seem ugly, may look ugly, right? An FHA loan, for example, that used to be sort of the loan of last resort, right? It was maybe for folks with a lower credit score, couldn't get approved for anything else. Now we're using FHA because the DTI ratios in this market that we're in, with a little bit of an elevated interest rate, now you could go get more house with that FHA versus that conventional.
And so, also it could be that the mortgage insurance is cheaper too, right? So
absolutely,
bigger home, more of an attractive payment.
Yeah.
But in the end, we have to do what's people will tell the customers, like the easy, like, hey, what's the easiest thing for them, right? Like, hey, do it this way, do the 20% down. Why? Because it's easy, because it's going to get more offers accepted, but maybe they can't. Yeah. So explain to them, you've heard all these things, you've read all these things, you were like, like the web Dr. MD, you don't do the research. Like, you can certainly educate yourself, but just because a program is saying this or that, what's best for you, right? So after listening to somebody with all the questions they have, write them all down. Then we go back to them and say, hey, this is why you can or can't do this. Or maybe you can do all these things, but here's the pros and here's the cons of every single one. What do you want to do? What exactly do you want?
Yeah.
You want to get a house?
Yeah. What are their needs, right?
Yeah, what are their needs, right?
How long are they going to be in that house? And because, Andrew, I tell clients all the time, and I know we've talked about this, you and I, for instance, work for the same company, been in a business about the same time, same job title, so to speak, VP of whatever we want to be. But if somebody gave each of us $100 bill,
right,
even though we're pretty much the same, we're both going to go out and spend it a different way because our needs are different. So make sure that your lender, because they've worked with a teacher in the past and you're a teacher, everybody's not in that same bucket. I see people that make 150 grand a year who want to buy $130,000 house, and somebody that makes 60 grand is trying to get approved for 300,000.
Yeah, right.
So everybody, maybe the same titles, but it's so important that when you're working with your lender, that they're looking out for you. And that is the name of the game. And ask those questions. Me and you talk, Andrew, all the time about, look, our application process, it's a fact-finding mission. Right? We are wanting to find out. It's not how quick we could fill in blue boxes so we can run your credit. Right? It's let's find out what your needs are, because the program, when we talk about the title of the show, what's the best loan, what's the right program for you? Maybe if you plan on moving in 3 years or 4 years and keeping this as an investment, we're going to do it a little bit differently than if you knew that first-time home buyer versus somebody who's 55 years old and this is going to be your forever home.
Right.
Right? So it's those approaches and not trying to paint everybody with the same brush.
Well, I also think it's explaining to the buyer. So it's also what's going to give the most sizzle to that pre-approval that's going to be able to get you into that home, right? So lease contingencies, and we talk about contingencies all the time, right? Like, do you have to sell to buy? Do you have to, whatever? Like, I don't think you should ever do waiving inspections, but maybe sometimes you got to do an appraisal gap, right? Like, I mean, that's probably the limit that I like to push things with people. But when they, start waiving things, you have to be reasonable with your contingencies.
Yeah.
And explain to the people why, like, and what it is.
And make sure those contingencies are, you're making that decision.
Yeah.
Not being based on, here's the way we should probably approach this, right? You've got to be warm and fuzzy in your heart. I mean, so if it's a house next to grandmother or mom and dad who it's babysitting and there's some issues and that, so be it. But, and know that, but just make sure, because look, I've got 3 loans right now, Andrew, 3 purchases. Every single one of them, the way we want them, were when I got with the realtor, letting them know, let's do escalation clauses on them.
Right.
And because the buyers I happen to have a few bucks, and they're paying up to X amount, regardless of what the appraisal comes back at, right? Now, so that's how they won. But I've got 3 of those right now. And that's how maybe right now in this market, you've got to win, but be prepared to. Not everybody can. We get that. But that's why, like what Andrew and I are saying, let's have that good conversation so we can give you the right options and not be like, oh, that stinks. Know that it's an option. Maybe instead of putting down 20%, maybe put down 5% in that other home and pay over 5-10 grand over what it was so you can get in that right house. Right, Andrew? Right. Those are the things that instead of just being order takers like a lot of folks out there are,
right,
and making sure that you're getting, when you're hiring that right lender, they're doing the right thing by you.
You got to go past, the first question you got to ask is, what are the rates?
Oh,
you got to get past that and explain, okay,
what are the rates?
Because if
elevated.
Well, I mean, because a lot of times the government they're going to be cheaper. Yeah.
Correct.
It should be though, like, okay, what is it that's going to get you into the home? Let's go over all these questions and needs you have. So listen, you talked about escalation.
Yeah.
A lot of people don't know what an escalation clause is.
Yep.
Why don't you spill the beans on that?
Yeah. So what we do down, and what I always recommend when we've got somebody that comes to us and we're looking at it and it's a house that they really like, if they have the money, in there, we look at, hey, here's a payment you're happy with. If this is a house you like, they'll call me, let me know. They're going to meet with the realtor. The realtor will call me, and we will run a number one. We'll look at what is the future value of that home based on what things are going on. How long will it take you to recoup that money? Right. Mm-hmm. We'll look at that because then we do kind of a bid over ask, so to speak. But what that escalation is let's say Andrew is asking $100,000 for his home, right? Well, instead of me coming in at $99,000, I'll go to them and go, hey, I'll give you full price with an escalation clause up to $1,000 over 105 grand. So if somebody makes an offer above asking, say somebody comes in at 104, you're buying it at 105,000 over asking. If somebody comes in at 106, you said you were topped out at 105. That's your number. Now you may go, hey, can I do more? Yeah, but it's not an auction either where we like a golf club. It's a house and you only have so much money. So then you have that choice if you have the funds. If not, you go, hey, that's too rich for my blood. I'm out. So
with the escalation, essentially, you're giving them that you don't have to keep going back and forth to you, that if someone's going to outbid you, you're willing to go up a little bit more to a certain price point.
And we try to, because then we're in control of buying that home.
Right.
We've got a pre-approval that says, hey, I can close in 20 days. Right. I've already been fast track approved. And it says, hey, this escalation clause, today's Wednesday, it's good till Thursday at 6 p.m.
Right.
Do you want to sit there and work back and forth over a few bucks when you got me who's willing to rock and roll with it up to a certain amount?
Now, some people are nervous about the escalation because they're like, well, won't the seller just say, yeah, I'll take yours and I'm going to max out that escalation clause? And I always explain to everybody that by law, when an offer is being reviewed, they have to, the sellers have to acknowledge that offer that was being made. So you can actually go back and be like, hey, whoever outbid me, here's proof of that. So they can't automatically just go up to what your escalation is. So you are protected.
That's right. That's correct. And that's part of the contract. They have to show you that, with proof of offer by X time. Yeah. And that way, because let's say the highest offer was $101,000 on your $100,000 home. Well, we're not going to say, 105, that's what you're willing to pay.
That doesn't work. Right.
We're not going to do that. So, and the beauty of that is, especially right now with the sale of homes, what we're seeing is even what a home is listed for, by the time we get the appraisal done and do all that, new purchases, new, what am I trying to say? New comps are showing up that help elevate. So sometimes that $100,000, by the time you go refine, well, maybe it's $103,000 it appraises for. Well, we'll do the finance for 103. You only coming out of pocket with 2, not the 5 you thought you were. Right? So those are the things there that's in this market that, again, it's more than just, hi, thanks for calling such and such. I'm your flavor of the day lender. What would you like? It's working for that client, being hired by that client and looking out for them. We're fiduciaries, man. We're just like financial. I mean, I take it personal, and it's my job because at the end of the day, they're coming back to us, Andrew, to find out, hey, what do I need to do now when it's a refi? Or so they're gonna, we're getting the phone call back because we're the money, and that's who people like to deal with. That's for sure.
How do you feel about this? So this tactic 2 summers ago was used more than it was last year, but instead of like outbidding and doing these price wars, right?
Yeah.
There's been a couple customers that I've talked to and I said, hey, if you offer asking price, but then you go ahead and you put in there that you were going to be paying the seller's closing costs, right? Have you thought about that? It's an X factor. It's a little bit different. But if an agent would look at that and say, hey, seller, like you're going to net whatever, you're not going to have to worry about the home appraising. And as a buyer, now you're not, spending, let's say it's 15, 20,000 over asking, right, to get that house. So now your taxes aren't going to get that big of a hit in the future as well. So I think it's going to be coming back this year. I think people are pent up. They want to buy. Yeah. I hope more people use that tactic and think about it instead of overbidding and paying more and having to worry about the appraisal. Asking price, offer to pay the seller's closing costs. Seller's happy. They net the same. They're not having to worry about it. Yeah. And it's a different look, and hopefully it can get accepted, right?
I love that. Yes, we've used that. I think that's good. And to be honest, with all these lawsuits going on, which is something me and you need to make sure we cover with all these lawsuits going on. And maybe we can get one of the big attorneys that do all these things on our show to kind of share with our audience what's going on with that.
Well, not lawsuits with cross country.
No,
mortgage,
with
right,
us, with the National Association of Realtors.
Realtors,
yeah. That stuff is going to be changing. And like what you said there, maybe that's an option because listen, when you go to sell a house, you know what your bottom line is. If you're selling for 100 and you owe 95, you ain't got much room for error. Right? If you're selling it for 100 and it's free and clear, and then you've got room to work. So it's our job as the buyer to find out what's that happy point to still win the house and keep that seller happy. Right. And that's why you don't want to go in with an insulting offer. Oh, you want $100,000 for the house? We're going to go 90 and we want, 5% in closing costs. That's insulting. Right. So, that's something we need to talk about too. Andrew, let's write that down. How to make an offer.
Sure.
Let's talk about that maybe next week on, because now you're out, you're how do you make an offer on a house? Right. And for the realtors that kind of sneak in and check out our stuff, we see you, take some notes. We'll kind of show you, hey, how do you make an offer on a house in today's market and win? Because you're brave if you're out there right now buying, right? So last thing I want you to do is lose out on that offer.
Right. No heartaches.
No heartaches. Absolutely. Good stuff there, man. You got anything else? I like what the Treasury yields are doing.
Sure.
The jobs reports, or I think next week's going to be when the CPI comes out next week. You got the BLS on Friday. That always scares me because Bureau of Labor and Statistics, I removed the L, and then what do you have? A bunch of BS. So we'll see what happens there. I always get scared with that, but my philosophy will continue to be this. The pain of the rate going up is a lot worse than the euphoria of it going down. Right. So we're getting with our clients. We're locking in. We're taking a little bit of these gains because right now, this is not a forever loan. No. DNA Nation. This is not your forever loan. It may be your forever home, but we're marrying a house and we're dating a rate. So let's get in as cheap as possible, but win at home and let it start working for you.
So, Dwayne, we got 35 weeks until the presidential election.
Yeah.
We had a Super Tuesday primary yesterday. I know, like in Ohio, it's coming up, I think, in another 2 weeks.
Yeah.
Guys, go out there and vote. I don't care who you vote for.
Yes.
And if you don't vote, you're not allowed to complain.
You can't.
But
right.
But it's important.
Yeah, you got to. And look, what it looks like, It's a rematch
Two-man race. Yeah.
It's a
Sure.
rematch of 20. And so, if you feel like things are good and whatever, just do your research. And again,
Yeah.
we're not trying to tell you you need to vote this way or that way, but at least get out there and vote. People died for you to have this right.
Yeah.
I think it's
But it's going to
important.
help, though, with the rates, right? Like, ultimately,
Yes.
once we get closer, it's going to come down a little bit. So that's
Yeah.
why, in the next 35 weeks, hopefully I don't know, I'm hoping to see 2 cuts, but, at least one, right?
Well,
let's hope.
but I think even if you look at what's happening now, all of a sudden these manufactured reports that were phony baloney, and we talked about this in the past, how the Fed backed themselves into a corner. Well, it's amazing because now the market starts going, yeah, what were we thinking there? So,
Right.
So then you saw it fall. Now you see it starting to get back up to all-time highs. Maybe that 10-year treasury, we told you it's ebbs and flows. It's
right.
ebbs and flows. Right now, hey, we told you 2 weeks ago we were at the top. Man, it's peaking. It's coming down a little bit. Maybe we'll get some momentum in it, and we're at one of those hills where it goes down. But we've just got to see. Don't let that keep you on the sideline. You can't time that out.
No.
Right? It's
nope.
If you happen to buy and getting locked in at the time when it's on the downside, great. Either way, you're winning with the value of your home. Anyway,
equity, exactly.
And,
yep.
With the
100%.
equity.
Right.
Yep.
Get on that ride. Enjoy the profits that are going to happen with the homes appreciating.
Yeah.
Absolutely.
Pretty much guaranteed. So, all right, DNA Nation. Hey, you know what? Go out, Google Mortgage Gumbo, Google Andrew Makovic. Go find us, look for us. And look, we're busy. Unlike other lenders out there, we're rocking and roll. Look, we're gonna get a website. We'll get an email and all that kind of stuff for you. But until then, we're easy enough to find. Just go out there, find us, Google us, and keep the questions going. Thanks so much for all the great comments. If there's something you want us to talk about in detail, hey, leave us a comment.
Let's
leave
go.
us a comment. We'll be more than happy to do that. And then, hey, we'll do a potluck podcast where we just answer client questions that we've gotten over the last month or so, and then we'll put that together. So
there you go.
All right, till next week, DNA Nation. We appreciate you, and we'll see you next Wednesday. Have a great week, and enjoy the rest of your hump